But trusts are so much more than simply tax. And there are many reasons why clients may wish to create trusts during their lifetime, or perhaps more commonly via their will. So thinking about privacy. So as we know, having a will, once it gets submitted to probate, that it becomes a public document. And on occasion, testators may not want to have all of their wishes or their beneficiaries exposed to the public. So using trusts, and certainly using trusts in a separate document, may help to keep those wishes or keep those beneficiaries private. We can also use trusts for investment purposes. Probably not necessarily through will trusts, but perhaps looking at investment structures that we may have. So things like life policy trusts, or trusts to receive pension payments, or other financial products. Again, perhaps more commonly through will trusts, is this idea of asset protection. Now, asset protection can take many forms. So it may be protecting the asset itself, so perhaps keeping family shares intact, or perhaps keeping certain assets, so properties, for example, intact as well. We also have accumulations. So accumulations are to do with income. Now, the rule against excessive accumulations was originally going back to the 1800s, and it had always been a statutory rule. Prior to our 2009 Act, so prior to our Perpetuities and Accumulations Act of 2009, accumulations were only permitted for a period of up to 21 years. So after that 21-year period, the trustees were obliged to pay out the income. After that act, so for all of our modern will trusts that we're going to be drafting, then we can accumulate for the entire trust period. So in theory, for up to 125 years. Of course, any of that is subject to the express provisions within the document itself. And that says that you may have to pay out income to a beneficiary, or alternatively, it may have express powers of accumulation. We also need to consider the effect of Section 31 on fixed interest trusts, which gives express provisions in a statutory form over when somebody becomes entitled to income. And we'll look at that in our next module.